All right, everybody, welcome back to another show. Today we've got, of course, Brent on the show again. It's been a while since we've talked, so we thought I'd invite him back on and kind of talk about a couple things. And just welcome, Brent. Thanks for coming.
Welcome to 2021, man.
Yeah, it's been since last year since we talked.
Man, you've uh
And
you've moved too. You're in a new
yeah,
locale.
yeah, that's the digital background. There's a whole mess behind me, and so we're gonna hide that for a little while. Um, but yeah, we've done a lot since last time you were on the show. You have sold a deal, and
You've bought a
I,
deal.
yeah, and we bought a deal. So, but I thought it was a good time to talk through. And this was actually your idea to talk through what it's like post COVID or kind of post COVID, I guess.
Yeah,
Hopefully post COVID,
yeah,
what it's like selling and buying a deal. So,
yeah.
I think it's a good time to just kind of take it from here and talk. What was it like to close a deal last year, or I guess you did this year, but
Yeah,
what was it like? And I know it was a longer sales process, so let's
yeah,
just take us through that.
yeah. Of course, man. Of course. So yeah, we just sold a deal. Closing was actually yesterday, so perfect timing. Obviously, we're in the what in into January right now, and so
Yeah.
obviously this was going on back Q3, Q4 of 2020. Um, I guess let me back up here, give details and things like that. So this was it was a 100 plus unit property. It's over in Atlanta, Georgia. We bought it about 2.5 years ago. Class C deal, really your bread and butter. Bread and butter stuff that we look, you and I are kind of looking at, right? Your workforce
Hmm.
housing, Class C, value add, stuff like that. Kind of, really walking in the door, it was sort of that, hey, look, no one's touched the interiors in decades. It's still all classic stuff. There's deferred maintenance, all those types of things in that regard. And we kind of backing up in history. So we took it over 2.5 years ago, and we definitely had a number of challenges and bumps in the road
Hmm.
along the way for sure. I can talk about a few of those, over the lifetime, and
Yeah.
uh, you know, uh, things that involved, insurance claims and fire,
Yep.
things that involve property management, things that involve issues with the lender in that regard, and then obviously COVID, and that
Yep.
hitting operationally in that regard. So I can, maybe talk about a few of those things, but inevitably we ended up selling the property. We actually did it off kind of pseudo off market. This was about Q3 when we decided to do that. Took it out sort of, lightly, got a lot of interest, and ended up picking a group um, they're actually based out of Tennessee, and but had owned like a smaller thing in the Atlanta area. And
Hmm.
for the most part, it was a pretty smooth closing. I mean, there was, despite COVID, there, probably like you and I've seen, there's been a lot of transactions that have occurred,
Yeah.
Q4, and the interest in residential multifamilies been sky high,
Red hot.
red hot, for XYZ reason. And so, at least from the selling side, those were positive. Was a real
Good.
smooth transaction. And, um, we basically, from a return standpoint, we're going to hit our 5 year projection in 2.5 years, in essence. That's the Reader's
That's
Digest version.
that's phenomenal. So have you, just real quick, have you done any math on like what your IRR was?
Yeah, I'm still doing it because what's interesting with the sales side that you don't think about is that it's not just like, hey, you sell, we got the funds, and now we're done, right? There's
Yeah.
still a lot of closeout that has to occur, right? There's still expenses and fees that need to be paid out and closed
Hmm.
out. You got to get all your accounting done, both for last year and for the current year, right? Because you got to
Right.
dissolve the entity. Um, there's staff bonuses we're going to pay. There's all these types of
Right.
things. So there's still some shakeout. The other part too is you still have incoming funds that you haven't received, not just from the sale. So things like, hey, we're our unused insurance premium, that's going to get sent
Right.
back to us.
Yep.
You got escrows if the lender's got to release, they're holding funds back that they got to release to you. Things like that. So you still have kind of incoming and outgoing funds that
For a
you're going to be
while,
dealing.
probably.
Yeah, yeah. So this is probably going to last for a month, as a general statement. But when I did the kind of the rough calculations, um, you know, uh, I think generally I think the IRR is going to be in the 30s, um, something like
That's
that. So
fantastic.
we'll see. Don't hold me to it. It's the whole, you want to under promise over
Yeah.
deliver type of thing. So I'd rather say things like, hey, um, we're gonna 2x your money, and then we actually do 2.4 versus, me telling you it's 2.5 and it ends up being 2.4 and you're upset at
Yeah.
me.
Yeah. No, that's really great. Couple of items. You said 100 plus units. How many units did you get through your full renovation plan?
So we adjusted kind of going in. We, going in, walking in the door, we had expected to renovate about 25% of the units.
Okay.
Um, so not a whole ton. The thing with that property was that they were already achieving pro forma rents,
That's right.
when we walked in the door without doing, without
Hmm.
renovation. Um, so which is good place to be in when you're, underwriting and things like that. And when
Sure.
we got in there, I think, and I didn't truly appreciate that even at that time, but when we got in, we started renovating. I think what we found was we really didn't have to do as heavy a renovation as was necessary to achieve those
Sure.
rents, or even to push it, because we ended up pushing rents like, I think, 150, $200 higher than what we even projected. Um, and so, there was some adjustment. So, realistically, we never really, quote unquote, fully renovated.
Sure.
Um, that many. We had a number of, I'll call it partials, so to speak. Is, it's kind of thing. It's like, hey, you walk in, you don't necessarily have to put the backsplash, or you don't have to necessarily,
Yeah.
um, change out this or whatever it is. And so it's probably a little lighter,
Okay.
than we at least on the interior stuff. So, definitely leaves a lot of meat on the bone for the next buyer, or the buyer, who
Yeah.
we sold to. So which is
Yeah.
good. And it's funny because, I actually had a number of conversations with the buyer directly. He'd call me, we'd text, which is kind of
That's funny.
interesting. But and he shared his business plan and stuff. And they're gonna dump, we had walked in the door thinking, hey, we're gonna dump like $4,000 a unit into it. Whether we did or did not just varies from unit to unit. But he's coming in, he's gonna dump another 4 or 5 grand into units and kind of take it, to that next level or next progression.
Okay.
And I think realistically, just he'll get it. He'll get the rents he's projecting, just based on what I've seen there and in the area and things like that. So it's definitely you know, it's a win-win for sure, because we
Yeah.
exit, we take chips off the table. He's getting a good property, and then I think his business plan, is sound in terms of where he thinks he's going to take the property next as well.
Well, that's a good point. So I can hear investors asking, or at least people saying, why not hold on to it? If it's such a great property, he's getting such a good deal, you're getting a good deal. Why not just hold on to it?
Yeah, I mean, I think realistically on this one, my partner Mark and I, we like this property a lot, and I think long term we ideally would have wanted to held it longer. I think there were a couple of different factors that influenced the decision to sell. I think, um, one, I think when you're just staring at, hey, what you can get on a game perspective, and basically get, you
Yeah.
know um, you can perform that way, basically hit your projection or exceed it in half the time. There's
Hmm.
sort of that, investor obligation type of
Yeah.
thing, and if you took a straw poll of investors, I mean, 90% of them are going to want to take it, right?
Yep.
So it is what it is. So there's some of that. I think too, from a capex perspective, you kind of run into the, hey, look, if you hold it longer, we are going to have to put money in, and it's sort of the thing where, the next buyer is going to put 4 or 5 grand into it, right? We're
Hmm.
not necessarily, we already walked in the door and put 4 or 5 grand into it. And so getting that extra spread, or those extra funds to do those types of things, that's got to come from somewhere.
Hmm.
So that's kind of one of it. And really, I'd say the biggest factor on this particular one is we had taken some brain damage, a little bit, particularly with regard to, I mentioned we had some things with an insurance claim and a fire, and how the lender was treating that as well. And so that was probably one of the biggest influences that made us decide, hey, look,
Sure.
we've done really well. Let's take a gain, and nothing wrong with taking chips off the table.
Yeah. Yeah. So let's talk about that a little bit. If you were an investor in your deal, what did that communication look like? How did you bring that up to investors? What was that conversation like?
Yeah, so we throughout the whole period, you're always kind of keeping your eye on the market, right? And you're always communicating that too. So like, if a comp sells, if properties around you are getting marketed, as an operator, you should be paying attention to that, right?
Hmm.
And then you communicate that to investors along the way, right? So it's kind of a, the reality is, you don't know if that's going to be the case for your property, but if you start seeing properties around you and direct comps trading for X dollars or at X cap
Hmm.
rates, you kind of letting investors know that, so they know that, hey, values are going up and things like that. And then also, as your performance and you're performing right at a certain point, like, that, hey, we're performing real well, right?
Yeah.
Or we've increased value to a certain point, and maybe you're getting a BOV or a broker opinion value every once in a while. So you're kind of always tracking that and kind of keeping investors kind of in the loop on
Hmm.
that. So that's kind of one thing. Another piece of it too is, as we got toward you know looking at doing that, one of the things we were communicating as well was, the situation with, I mentioned there's a situation on this particular property kind of driving us to think about selling with that claim and whatnot.
Yeah.
So obviously that's a monthly update. I mean, like, in every update that's getting sounds like, okay, what's the latest on this? you know
Yeah.
so there's that. So you're kind of always communicating that. And then, particularly on this property, our PPMs are set up to where we, as the managing partners, technically have the ultimate decision making
Sure.
on, capital events. So obviously you're going to take into account at
Hmm.
least kind of straw polling people and talking through that. So the reality is, like I said, in this particular situation, I think in a lot of situations, if you're staring at that, 9 out of 10 investors are going to say, yeah, we agree with you, you
Yeah.
know, type of thing when you lay all that out. So I think it's kind of a slow iterative process. And I think that goes back to sort of you're constantly communicating with investors. And so by the time something happens, it's no surprise,
Yeah.
whether good or bad.
Yeah, that's great. So talk about some of the challenges. Why did it take so long to close the deal?
Hmm.
Because I mean, if you're talking Q3
Hmm.
and you're just now closing, that's a long time.
Yeah, and I would say, there's combinations because, as and we'll get to your transaction too. Even when you're buying, right,
Yeah.
it's a 60, 90, potentially 120-day process from the day the deal first comes across your desk, right?
Yeah.
Same thing here on the sell side. I mean, when we decided and kind of went through, I mean, you're doing things like, you're getting, your broker opinion values, you know, you, your broker is pulling together all the information, which is not, you know, he's got to get up to speed too, right? Because he's got to be answering the property. He's got to be looking at the financials. Hey, we need pictures. We need explanations of this.
Yeah.
They're putting together their OM and their story and narratives, and so by the time you from decision making to time it's hitting people's inboxes and things like that, it's a few weeks, right?
Yeah.
In that regard, and then you're answering questions, right? I mean, buyers are you know on the other side of the table, like you and I look at deals and we're like, well, what is this, or why did this happen, or hey, can I
Yeah.
tour? So you're kind of always doing those types of things. And we went under contract, was kind of your standard 60-day deal. um, they were doing it was an agency debt that the buyer was buying on. And so, as I mean, those aren't a lot of times you're not in control even as a buyer of
Yeah. It's a
how
long
those
process.
go, how those go in that regard. We knew who the buyer was. Like I said, I've talked to him. He's just like us. I mean, there's syndication group as well. So they're having to raise equity.
Hmm.
Um, during that time period. And so, when by the time the contract was signed, I think late December was sort of when the target date was in terms of PSA. But realistically, I think everybody kind of thought, this is not going to close on December 28th, right? Or day after Christmas or whatever it is, just realistically speaking.
Yeah.
The other part too, and I would say back to the win-win. So um, the buyer, one of the reasons the buyer extended into January was also for tax reasons,
Hmm.
in terms of their, and I'm butchering this, but basically, so them pushing it to the next year would, um, you know, do things in terms of like triggering assessments and their portion of the real estate taxes.
Oh,
Um,
okay.
and at least for us, at least in our opinion, it's better because now we have a full year to deal with, all the fallout from our gain
Hmm.
and things like
Yeah.
that as well. So,
Good problems.
yeah, so good problems, but, you know, so, realistically, you're probably talking August, September to January full process, but I would say, even when you're buying, that's not out of the norm in terms of length of time. So,
That's awesome.
but, but yeah, that's,
Well, congratulations. That's
yeah,
a big deal.
yeah. Well, thank
I'm
you.
sure your
It's,
investors are happy.
yeah, well, they'll be
Nine out
happier
of
when
the
they
10 of them.
actually, yeah, when they get the checks, right? So,
Yeah. Yeah,
so,
that'll be cool.
yeah. So let's talk about your deal, man. So
Yeah.
you bought a deal during
Yeah.
during this time
We were
period.
the suckers. You were the winners. No.
Yeah, tell me
No.
about it. What I already know the details, obviously, but yeah,
Yeah, but
what's background? How you found it? Where's it at? Those types of things.
yeah, so it was 200 units in Montgomery, which we already own a property there. So it was kind of a nice addition to that. We got, um, it's good and bad when you move to a new market because you have all that new possibilities and everything, but you're stuck finding contractors, staff, crews to do everything. You're still figuring out the market. Well, we did all of that with the previous deal, which
Yeah,
good or bad. There's some good, there's some bad, but we figured out some good stuff to take to the next deal, and so we found that one. And um, this was actually being sold as a portfolio. This is more of an institutional group that was selling, and they were moving out of Montgomery, and so they had a property portfolio, and they were actually right
mm,
next to each other. One was more of a '90s product, and that was scooped up really quick by actually a cash buyer,
okay,
which was
wow,
kind of cool. And so
yeah.
we scooped up the other one, and yeah, it was a long process to close too. I think
So I guess back to the seller, you said they were institutional.
I
Um,
think so. Yeah.
did 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 kind of the environment and COVID and all that stuff, did that come into play with them exiting, or how they were approaching the
I
market,
don't know.
or
I don't really know. They're selling a lot of stuff in sort of the more tertiary markets. So I don't know if that's more of a philosophy change. I don't know if that's COVID. I don't know necessarily what exactly it was, but
yeah,
they were good deals.
yeah,
They didn't, eh, and I won't say the name. So,
yeah,
but I don't think
yeah.
they're making hardly anything on our deal. I don't think they
uh,
made much at all.
Gotcha.
And so that might be part of it, but they left a lot of meat on the bone personally, but it needs a lot of work too.
Yeah,
It was
yeah,
not in great condition. So, um, moving into the building, my partner Tim, he drove the buildings, and we knew a lot about it going into it.
yeah.
There were some foundation issues which scare a lot of people,
Hmm.
and there were, I think, four, maybe five buildings that had some heaving and sinking issues.
Okay.
And so that was going into it. We were thinking like that's going to be our major thing.
Yeah.
It needed all new roofs, but we negotiated that to be done by the seller. He was already in the process of doing that, but
Okay.
weather kind of got in the way, so it was delayed. But that wasn't on us, which is cool.
Hmm.
So going into it, we thought, okay, the foundation's really the biggest thing. So
Yeah.
when we were under contract and doing due diligence, we actually brought along two different structural engineers
Okay.
um, and a landscaping engineer
Hmm.
to kind of figure out the process, like what the issue was. And what was cool is, both of them agreed there was definitely foundation issues, but they both kind of agreed also that it wasn't as big of a deal as we were thinking it was.
That's good.
Um, yeah, it was huge. I mean, that's a really great thing.
Yeah.
Um, it was mostly drainage. Um,
Okay.
so there was trees right next to the foundation, and so the root system was pushing up one side of the building, and then on the other side, the roots had
Sinking on the other side.
was
Yeah.
sinking on the other
Yeah.
side because the roots were sucking up all the water in the water table, so it was
Yeah.
heaving
Yeah.
and sinking at the same time.
Yeah.
Well, it's an easy fix. You just cut the trees down, kill the roots,
Yeah.
and you're
Did you have
done.
to put any piers or things like that, or?
Yeah, so that's kind of where the two structural engineers disagreed on. One said once you, because of, and this is way beyond
Yeah.
my intelligence level,
We're
but
we're not structural civil engineers here. So
yeah,
I'm
he
an
said
electrical,
one,
not a civil.
yeah, one said helical piers are definitely critical. You got to put them in, um, but don't, you don't have to necessarily do them right away. The other structural engineer said, no, you don't need helical piers. You just need the ground, the water table to settle with this type of soil and clay and stuff. You gotta, I don't know, it'll stabilize on its own basically if you fix
Yeah.
the drainage issues,
Yeah.
because there was also drainage issues.
Yeah.
And so both of them kind of agreed, sort of, that we could wait.
Hmm.
So as long as we
Gotcha.
killed the trees, got the root system, we might as well wait for the water table to stabilize to figure out what we need to do. So
Gotcha.
it was actually really cool to learn a lot about that stuff in the
Yeah.
process. But the good news is there was nothing that had to be done right away. So
Yeah.
we're
Yeah.
we're already in the process of cutting down trees and stuff.
Yeah.
So that'll be fixed soon.
Yeah.
But um, sort of the worst part of that is we actually found aluminum wiring when we were doing our due diligence.
Okay.
We just, part of our inspection process is clearing off or taking off some panels and
Yeah.
having a look at the wiring. And so they had some fires on the property, which is very common in apartments. Like, it's just really common.
Yeah. I just
So
mentioned on the one I sold. We
yeah, yeah. What was your fire caused by?
resident
Cooking.
base, yeah, cooking. It
Yeah,
what for whatever reason, residents cooking causes fires a lot. Like,
yeah,
it's like you said, it's more common than which is
yeah.
weird.
Well, and you never know if, like, what the actual cause was, or if
Yeah,
they
there's
just said it
that.
was cooking. So
There's that too.
yeah, so but they just happen a lot, and we take steps to mitigate that. But at the end of the day, it's not a red flag if you see, oh, this caught on fire.
Yeah.
So it didn't raise any red flags that there was fires. They had renovated it, put copper wiring in. So
Yeah.
um, so we couldn't just blanket across, say, oh, all 200 units have aluminum wiring. No, the broker said, hey, if you want to get a really good retrade, you need to walk through every single unit and pull every single panel and take pictures of every single one. So we extended due diligence a little bit by a couple days, and it cost us a lot more money.
Yeah.
But we got an accurate recount, and we asked for, I think, 600, $500 or $600, or 500,000 or 600,000 off the
Oh,
price.
wow. Wow. But you
We
had
ended
an
up
exact number of like, hey,
we had bids.
133 of units of here have aluminum wiring. Here's bids that prove, what's going to take cost
Yeah.
this basically.
Yeah, so eventually we ended up settling, and it'll all be paid for, which was awesome. But we have
That's
to
good.
actually execute
Do
and
the
go
work.
through the work.
Yeah. Yeah.
um, and the seller was kind of backed up against the wall because we can't really get agency financing with those issues.
Yeah.
And so he's either looking at someone like us that's buying it on bridge debt, which will eventually have to take care of it, or a cash buyer, or you know
Yeah.
something else. But that significantly lowers his sales pool. We were so far along in the process already that
Yeah.
it just made sense to keep going.
Yeah. The reality is if he just said no or was like, screw you guys, he's gonna have the
Yeah,
same issue with any other buyer, really, at that point.
yeah. And with those institutional buyers, it's not just you know you and another partner making that decision. It's if your firm has decided, okay, we're moving out of Montgomery, it's not like you can hold on to the property and
Yeah.
be
Hey,
choosy for a while.
we'll hold on and then fix this ourselves and go back
Yeah,
or stuff like that.
yeah.
So
So
no, that's true.
yeah, so that worked out well, and you know, Tim has been, you know, working his tail off making sure that we didn't lose a step during the holidays because we closed right before Christmas. And,
Yeah.
most investors I think would probably take that time off and really relax. But Tim has done a phenomenal job being on the ground. I think he's been there twice already,
Yeah.
and just making sure we've already gotten into 5 units to renovate them. Um, obviously we've had a quite a bit of vacancy because of the foundation issues,
Hmm.
which was kind of cool because we could put our renovation crews in those
Yeah.
units.
Yeah. It's like, hey, jump on it. Let's go.
Yeah, so we have 11 units that are being occupied by our crews, which is cool because it's not there's no commute time.
Yeah. It's like, wake
It's
up, get to
work.
work.
Yeah. So
That's cool. That's cool.
yeah, it worked out well.
So you brought up, I guess one question would be, because we're kind of talking through these transactions in this quote unquote post-COVID world.
Yeah.
What was it like with sort of investor sentiment and raising capital? Like you said, kind of December was kind of an interesting time. We raised capital for per transaction as well,
Yep.
but I'm curious, what was your experience with that? And, the way investors were kind of sentiment given end of the year, December, hey, COVID, all that stuff.
Yeah. It was interesting. I mean, every raise we do from now on will be interesting because,
Yeah. Oh
you
yeah.
know, um, yeah. So we started raising near Christmas or near Thanksgiving into Christmas during COVID, you know, so you kind of get a tailwind at the end of the year because you have folks that are looking for, tax benefits. And so they'll throw money at anything almost as long as they get depreciation. And then you have folks that are like taking the holidays off. So they're not even looking at their email. So I'd say overall we accounted for everything we could have, and um, we did well overall. I think there was a little bit of struggle with some parts we thought would come through. Some money we thought would be a little easier to come through didn't actually come through. So it took a little longer than we would have liked, but we didn't have to actually extend the contract. So it wasn't the hardest thing in the world, but it wasn't as easy as I would have hoped. But it was about as I expected.
Yeah, yeah. I think we've noticed the same thing too, and it's interesting because the investor appetite. And apologize if you can hear stuff in the background.
It's like Christmas bells.
Yeah.
Is your dog?
No, my wife's vacuuming. I think in the other room. This is live, folks. So
Yeah, no worries.
um, I think what's interesting, at least from what we've seen on raises and investor sentiment, is it's definitely still been strong.
Yeah. Oh
You
yeah.
mentioned the end of year thing, which is, of course, is definitely a thing. And I don't know if it's people making up for lost time because there weren't a lot of and
Mm-hmm.
investments to be made in like Q2, Q3. I do know I've heard stories and folks who if you were in hotels or retail or
Yeah.
office space, you just got hammered. you know,
Yeah.
um, inevitably we get more calls from people who are finally sick of the stock market after this year, stuff like
Yep.
that. So it's knock on wood, it seems like residential real estate is at least from an interest perspective is
Yeah.
still
No, for
good.
sure. I think what sorry, I've got a broker calling me about a deal. Obviously,
Getting stuff done, man.
there's lots of deals going on right now, and that's that's normal.
Obviously,
But
right. So,
yeah, they also want a pretty penny for them. So this broker, I wanted $10,000 a unit more than what we could pay for a deal. So, but anyway,
it's big.
that's
Yeah,
beside the point.
yeah. Nope. It's
I have noticed like what's
no, go ahead.
I have noticed that what along with that investor sentiment, like I really want to jump into this. There's definitely a hesitation with, um, obviously they're new, they're trying to figure it all out, but the folks that have been in it for a while, and you kind of hear the rumblings on Facebook groups, on Bigger Pockets, on places like that, that now more than ever, it's important to have a really strong management team,
Yeah,
and sponsorship team, the folks
yeah,
leading the deal, just because everyone's a little nervous where we're at with everything right now, and so you know part of your job is mitigating risk. You got to mitigate people who have never done it before, and
yeah,
so we were talking about that before we started recording.
yeah.
Sponsorship team is pretty critical right now.
Yeah, yeah. And in a lot of instances too, like even on the lending side, we had I guess a
Yeah.
mastermind call the other day with one of our mortgage brokers, and she was saying how, even the agencies, they're like, for any example, they're looking at experience track record right now,
Way more than,
much more stringently than they used to. so
yeah.
so like you said, it's all around. You know, people
Yeah.
with experience, people will actually pay attention and know what they're doing. So
Yeah. Yeah. So time will tell. I think we've got a lot of meat on the bone here on this deal, and we're excited to get it all done. Um, we're obviously already in some units, and we're pushing them pretty hard.
yeah,
Um, so we'll see.
cool, awesome. Well, that's exciting, man. So
Yeah.
yeah. Anything else? I mean, it's a
No, I think it's just interesting, kind of comparing the two things. Like obviously we're in uncharted territory, but for all of that, it still feels very familiar. Like
yeah,
transactions are going to take a while. You need
yeah,
people who are doing their job
yeah,
correctly,
yeah,
and
yeah. Same,
lenders are always going
same.
to throw you curveballs.
Yeah, nothing is new there, right?
Yeah.
So cool. Well, it
Yeah.
was good catching up with you, bud. Thanks for having
Yeah.
me on the podcast again.
Appreciate you being here. We'll have to do it again next month.
Yep, we'll see y'all next month.